Morning, everyone. Thank you for joining us this morning for this live pop-up trading session. Let's jump right in and talk about the markets, and then let's do some trading. In the Telegram group, we've been talking about Upstart. It is a fintech company. It's shot up almost 80% so far today. So we're going to see what type of trade we can do into that. And we're going to look at some of the trade ideas that was sent out to all the members this morning. All right, so the market looks like it's coming off its lows, at least the S&P and the Russell. The Russell has just went green a second ago. The Russell is the RTY over here. We're just looking at the futures. This is basically flat. Let's look at this here. This is basically flat, and you see the Dow has just been sky high recently, and it's leading the way today, up over 0.5%. The Nasdaq, the technology stocks are kind of falling behind this morning, and then the ES is trying to gain its footing. After the Fed came out yesterday, the market recovered from being down, and it looks like it's still trying to digest what's going on. All right, so if you are on the call, please mute your mic until you have a question, okay? All right, so if you have a question, unmute your mic. Otherwise, please keep it on mute so that we can not hear any feedback noise. All right, so that is basically what the market is doing at this point. Let's jump in and look at Upstart. Upstart is a company that went public in December, I believe, and you can see what has occurred since it went public. I believe it went public at $20 a share. It shot up to like 40-something a share, and then obviously it just hit its all-time high a little while ago today, and it's still very close to that right now, around 108. So let's go over to the TastyWorks platform and let's look and see what we can do with this. This is it's up, and then ST, that's the symbol. And looking at this, it doesn't show any earnings right now that's on the schedule. That doesn't mean it could be some earnings coming, but we're going to play this as if we do not have any earnings in the near future. Obviously, it's going to pop up here eventually once they let the SEC know and so forth. All right, so we have we have 29 days to go, and I would be bullish on this stock. It's a fintech stock that provides AI technology to bank or financial companies for now. Maybe they'll go into some other stuff. It's still pretty new. It's still obviously probably way overpriced and so forth. You can see this implied volatility saying it can more than double or it can go to zero. Obviously we don't believe this is going to go to zero within the next 29 days, but the probabilities of it going up and down could be very volatile or very high that can be the case. But let's be a little aggressive and let's see what we can get at the 15 delta here. This is pretty much the standard Dorian Way type of put spread, but let's see how much we can get. So if we sell in this 5-point wide spread here, you can see we can get 135 if we can get filled at this, right? This would be an amazing trade with buying power of only 365. So let's send that and see if we can get filled. If we can get filled, that would be great. And this would be a bullish little trade that it could drop below that. Obviously, before this move today, it was, let me see, it was lower than that. You got the 108 minus the 47. It was at 61. We're doing the 75 strike here based on the current implied volatility that jumped up and the expected move. So I like this trade if we can get filled, and if we get filled, we will go into the QQQ and we will hedge the downside just to see if it's related to tech stocks or not. Obviously, right now the Nasdaq is down almost 2%, and this is up 80%. So they're not correlated today, but we'll see how that goes out and continues, because this Upstart is very, very new. But it looks like something fun to trade. If you think it has a lot of more upside, you could do a bionic bull that we was looking at that I sent out earlier in the Telegram group. I believe that bionic bull that I sent out was something like this: buying the 115 and selling. I believe it was selling the 95. I don't remember exactly, but 95 here, and doing I can look it up, but for time purpose, I'm not. But doing this for a credit by selling a few of these So if you sold 4 of these, you can see that you can get a credit. It's not that much of a credit at this point. It's only 1 cent there, but if we move this up a little bit more, then that's going to be a lot more credit. You'll get $3 of credit there. So this is a possibility of a trade if you're okay with this buying power right here. And then this bionic bull will give you nothing but upside. Obviously your risk is to the downside, but that is, you have a 70% chance, almost a 70% chance, basically a 7% chance of winning on this trade, even if you do this modified bionic bull by using a put spread to reduce some of the buying power that's required, because this stock is so volatile. The buying power to sell something naked is pretty high. All right, so looking at this curve view, you can see here that this is the bionic bull on the curve view here for this Upstart. This is the at the money here line. So if it goes up, you have unlimited gains to the upside, because you have this call here, and this call was financed, right? So this is what I love to do. If we have to buy something, we like to finance it. Like, so most of the time when we're hedging something, we're financing that hedge. So this is a bionic bull to have unlimited upside. You're financing this by selling a put spread here. This is the put spread that you're selling. So the way you lose is if it goes down, right? But you have some wiggle room to the downside, as we mentioned. This is the at the money. If it goes down, you don't start losing until a little under 100. That's when you start losing, and it has to drop. But you got an $8 basically cushion. That's nothing for a stock that's volatile now, but it's better than buying the stock outright, using a lot of capital to buy 100 shares. If you bought 100 shares of this right now at the price that it is right now, it's going to be over $10,000. And obviously you have risk all the way to zero, even though we don't believe it's going to go to zero anytime soon. But in this case, you can have unlimited upside. Let's say it doubles again, and let's say it goes to 200. Well, you'll have all that gain and you receive the credit for it. So this is the possibility. If your account is big enough, you can do something like this if you are wanting to be really speculative, right? This is definitely a speculative type of trade. This is not a yellow highlighted trade type of trade. Let me emphasize that. This is not a yellow highlighted trade. This is not something that I would recommend to everyone, right? All right, so any questions on this trade to this point? Any questions on this stock to this point? All right, so if we don't have any questions, what we're gonna do, we could let this come to us, but we're gonna try to be a little aggressive, and we're going to move this down a little bit and see if we can get filled at the 130. It's probably going to bite us, but we're gonna do it anyway because I like the trade to kind of get us engaged in it a little bit, but they're not giving it to us at this point. So we'll see if we can get filled. We're saying 130. The mid is saying 145. That's obviously a wide mid, so it's not really true. And let's hit replace one more time, and let's look at this. Let's go to the trade tab there. That's the 15 delta. We might even go up to the 19 delta. Sometime we'll go as high as the 20 delta to initiate a put spread. Obviously, we'll go higher than the 20 delta to do like an iron butterfly or straddle or something like that. So looking at this, if we sold this one right here, let's hit clear for a second. If we sold the 18 and bought the 18 delta or the 80 strike and bought the 75, that would give us 130. So that 15 strike is not trading for 130 if that's the case, right? Something's off. So let's go and look at this, and we still can get a decent amount of capital. Let's try 125. See if they'll fill us at 125. All right, so that's still a really good return. That's 122 over 377. So 122 divided by 377 is, we got 32% return on capital if we can get filled. And no love to this point. Let's let that sit for a second, and then we'll look at a couple other trades. This morning we were doing a high. I got a question.
Brian? Yeah,
Yes.
I have a quick question. What would you think of a long-term bionic bull on that? Let's say an October date, expiration date.
On Upstart. Okay, so let's look at Let's look at that. The October of 211 days. That's what you're saying?
Yes.
Okay, perfect. All right, so let's look at that. Let's look at the same strikes for a second. You got the 115 and you're buying the 115, and let's say you sell the 100 here, 100 190, right? And you have to do enough of these, so let's highlight this to be able to get a credit. So in your account, Deville, this might look pretty nice because the buying power is gonna be significantly less than this. But you would have to do quite a bit. It's not giving you very many. You have to do a lot of contracts on this to get a credit. So I don't like that. Let me see if we get if we change this up a little bit like that. That's still a lot of contracts. Let's go here. 10 point wide there. So that's still a lot of contracts. Let's see if we can keep this to 4 contracts, and that's 4 contracts there. Still quite a bit. I don't like it. It's going to cost a lot for a put spread. For a put spread, it's going to cost a lot. So this is a 15-point wide spread, and you can see that it's requiring a lot of buying power, to more buying power to 211 for 211 days. But you still got unlimited upside. You're only getting $85 though. If you move this to the 125, since it's a little bit longer, and then maybe a little better there. But I don't. I'm not in love with that trade here. I like the 29 better, but because especially if you don't want to hold up $5,700 if you have regular T margin. So if you did this as a naked trade, so just for illustration purposes, this is about you would need to let me remove some of those, and let's just go to 1 here. If you did 1, that would be a $40 debit. If you move this to the 105, it's almost at the money, then you'll get a credit, but it's requiring $10,000 to do that, right? That's pretty much the max loss they're requiring to put that up, right? Because it's 100 time 100 time 100 times 100 is 10,000. So this is basically requiring almost the full amount of the loss on this based on this volatility of this. So that's a lot of capital to put up on this trade. All right,
Yeah.
so
Okay. I was trying to find something long term on that, and so I couldn't
yeah,
find
I
anything either.
agree. I agree, Duvel. Doing something long term would actually be nice. But maybe since, longer term, people might get they might come back to their senses. So maybe shorter term is better for the type of craziness. Maybe like MM was saying in Telegram, maybe you might get some type of crazy move like GameStop, and in that point you can potentially make some decent capital in a short period of time. All right, so this is
Oh, Brian, a question like,
yes.
how do we adjust this? I have a bionic bull on diamond from the other trade ideas, and it's in like 40% loss. So do I need to adjust it or just wait out? Its expiry is in April 23rd.
For which
But
company?
Dow Jones, DIA,
B
diamond,
I B I
no,
A.
DIA, Dow Jones Index. I think this is one of from the trade idea, right?
DIA, dog idea apple.
Yeah, you got it right.
Okay, all right. So this wasn't a trade idea uh, from me that regarding a bionic bull. I wouldn't have did a bionic bull in the Dow. It was a short call spread that I remember recommending on this, and that could be a problem. So what's your trade? Let me see. Is it Steve?
Yes, is it?
What's
Yeah,
your
it's sell one call and buy one call. Is that the short call spread, Brian? I think
buy one call and sell one call could be a bionic bull? Yes. What's your trade on this, real quick, Steve?
it's 345 sell and 350 buy call,
What?
and
How many days expiration?
April 23rd,
April
36 days.
23rd. Okay, 36
Yeah,
days. And then your call strike that you bought is what?
350 is the buy price and 345 is the sell.
345 is the sell and 350 is the buy.
Yes.
Interesting. So how is this possible? Uh,
No,
how-
both are on call side. Actually, this is a call spread. That's what it looks like. Sorry, I thought it's
oh,
a buy.
okay. Okay. So it's not a bounty, but it's a call spread. Yeah. Okay. So um all right, so you sold the 345, bought the 350, correct?
Yes.
All right, so then you're perfectly fine still. So I remember recommending this type of trade. I didn't recommend a bond and bull in an index. So, but yes, this trade is good still, Steve. You're only a 22 delta. If this is the case, I like this trade too. Still, it's 36 days ago. The Dow has been going up ridiculous amount. So just let this play out. Don't make an adjustment here until around the 35 delta. So let it play out a little longer because this Dow is really overheated, and if you get a pullback, it's going to suck out a lot of that premium. You might be able to take this off for a win. Okay.
Oh, okay. Thanks. Sorry, I
Yeah.
got
So if you have any questions, just keep me informed, Steve. I'll help you with it. But this is not a problem at this point. It's barely at the tail end of the expected move right now, even though the Dow has been going up so much. So this trade is still good for you. All right. So let me go over a trade idea that we had this morning, everyone. We were looking at RT. We're gonna go back to this Upstart here in a second, and we might even look at GameStop today, believe it or not. All right, so you have RTY, and I put in a trade idea to do a put spread. Let's look at this. This is a yellow highlighted trade. We did it for 64 days, a little longer than we normally do the 30 to 60 day point, but obviously, we do long dated stuff. We have a webinar going on that Ernie's going to be leading on Saturday. So if you want to participate in that, please do. It's going to be at 10 a.m. Central Standard Time. But this is a trade idea, selling the 1960 on the Russell. It was down. It's down again now, which is great, right? Wow, the market fell quick, but that Dow is still holding up. All right, so we buy this 1930. It's a 30-point wide spread. Keep in mind that the Thinkorswim is showing 190. That is incorrect. Thinkorswim has been off with almost a year now with its options on futures on some of the indexes, and so you have to be vigilant about the price you put in for Thinkorswim. I've contacted them several times. They said they're aware of the problem and they are trying to fix it. But for some reason they are neglecting it, or it's bigger problem than what they are indicating. All right, so this is the 64-day trade. This is the same one we were just looking at on Thinkorswim. The true price is 270. Thinkorswim is saying 190, or let's say 260, 250 at least is the price. Thinkorswim is saying 190, which that would fill you right away, and you'll already be down. Right, so that would be frustrating. So let's go in here and let's look into this trade. This is the yellow highlighted trade. I love this trade. We're gonna do it. I'm gonna make sure that this is at 70. We're gonna lock this in at 70, and then we're going to go over here and we're gonna get 135 if we can do it. I mean, excuse me, 135, 131 after fees and commissions if we can get this filled. And this is gonna be a yellow highlighted trade. It's a 15 delta with 64 days to go. And if we do the percentage from how far it's at the money, that's the 1960 minus what it's currently trading at, which is 23.25 divided by 23.25. That is over 15.5% down. It would have to go before you even hit your strike. So let's look at this, and that is, let's see what TastyWorks is saying. It's saying 260, so that's dropped that down a little bit. And from 270 to 260, it'll still be a good price for us. Let's see if we can get filled at 260, and let's send that here at 126 that we will get, and we're gonna let that sit there for just a little bit. All right, so that got filled, right? So that yellow highlighted trade got filled. So what you're going to do now is go into the IWM. We received about 126, but we're going to go into the IWM and we're going to buy a hedge using no more than 30% of that. So let's go to the 64 days in the IWM. That is right here. we're going to go to our standard hedge at the 30 delta or near the 30 delta. We're going to go over here and we're going to buy this right here at this 30 delta, and then we're going to sell 1 point lower, which is going to be the 214, and then it's going to cost us about $23 to do that. That's going to be perfectly fine if we can get filled. So we're going to send that to see if we can get filled, and we got filled right away, everyone. So that is the yellow highlighted trade. I know a couple of you probably already did that trade today. That is a really good one. And if you see this account is doing decently, even though it's basically flat today. I got some things set up, but this account is up about 20%.
Can you open that IWM so I can screen capture that? Because I'm going to do that one.
Okay, so the IWM is the 215 strike, 215 strike, David. 215. You buying the 215, selling the 214 with 64 days to go. Okay, there you go. All right, so now let's jump back over to this position here and see what you're welcome. So we for some reason we can't get filled on this this Upstart. I might get a little bit more aggressive, but let's see just for illustration purposes, we're gonna get robbed. I'm gonna go a little bit lower, everyone, see if we can get filled. Let's go to.
I just got that for 265.
You just got what for 265? Oh, RTY. Okay, perfect.
Yeah.
Good. You got it better than I got it then, which is good. I really want to get filled on this for illustration purposes. I'm going to get a little bit more aggressive. We're going to cancel that, and then we're going to go in here and we're going to do a replace order. And then because I want a little bit more capital, we're going to actually go to this 18 delta here, and then for the 880, and we're going to that 880 is saying 115. You're trying to take the premium out of this. Why is that? You can see that the 15 is more than the 80, so that's probably off. We're probably not going to get filled on the 80. I mean the 75 here for. Let's see here. All right, so we got filled right there. Unfortunately, it's going to show that we got a loss already, everyone, because the mid is going to pop back up to what it is, to what it's saying the mid is. So it's showing a loss already. So, but that's understandable. That's fine. We got 107 after fees and commissions. I wanted to demonstrate this and see if we can play it and make some money in this Upstart. What we're going to do now, though, is that we're going to hedge this. We're going to hedge it because that's what we do, and we're going to hedge it in the QQQ. But I want to check something really quickly before we do that. I want to go into 64 days. I was trying to see if it had anything with a 1 point wide spreads. It do not. So we're going to go to the QQQ, and that was 29 days ago. So we're going to find the 29 days. If we couldn't have the 29 days, we'll do something that is near 29 days. So we're going to buy this 30 delta, sell this this 29 delta. So buying the 303, selling the 302. This is going to be about $25, $28 after fees and commissions if we can get filled. We're going to see if we can get filled. Probably not, since the NASDAQ is down so much. So we're going to put this up a little bit to the 26, see if we can get filled, and probably not. And based on illustration purposes, we're not going to wait. We're going to get this filled, and we should get filled at the 27 here, and that's still going to be less than 30% of the hedge. And there we go. All right, so we got the hedge on, and we got the position on, and you can see that that's going to fluctuate and look like we're going to look kind of poor on that for a little bit, but that's fine. All right, so the CCIV trade, we were up over $100 on it today. The NASDAQ is falling a little bit more. The market is falling a little bit more. We have not made an adjustment on this yet because our call spaces on the put side is around 26 something. So we have 33, we have 331 in cushion. So if we're at the 29, we take 29.50. This is the put side, everyone. We had 29.50. We take that 29.50 and we subtract 331 from it, and that gives us 26.19. So our call spaces, we don't start losing on the put side until it's somewhere in this area. Okay. So, and on the call side, we don't start losing until it's somewhere up in the 31 areas, over in somewhere in here. So we have a little range. So we're gonna let this sit. Only thing we have to worry about is being exercised on one of these. And if we do, then we're gonna have to, get out of it at that point, obviously. Because it's only one day to go, you have a higher probability of being exercised. It's still small. We still don't really have to worry about it into expiration. But I do know that Ernie got exercised in the CCIV, I believe, about 2 weeks ago or so. And I think he was even out of the money. So it could be some issue with this one. A lot of people trying to get in it or whatever the case may be. I don't know what this the situation there was, but normally it's still like a 1% chance to be exercised, even if you're in the money. So yeah, I'm not worried about that. You could be. I'm just giving you the disclaimer. This could happen if you have this trade on, but we are doing fine with it. If you did all these adjustments with it, we still got a little time. I hope that the premium comes out of this faster by the end of the day and we can get out of it. If not, we're probably gonna have to get out of it early tomorrow morning because premium gets sucked out of things really quickly. We don't want to have a big move in this because this thing can easily go up $3 or down $3, but the expected move right now is under $2. So I think we're going to win on this, everyone. If it stays, if it does what the expected move is right now, we should be able to ring the register on this with a little win, but we will see, right? All right. So, but normally, if I wasn't trying to demonstrate this for everyone, I would get out of this trade because we are up on this account about 25% on the year, and I don't need this headache in that. But for demonstration purposes, showing you how you can still win even if you invert it the way we are right now, right? Both of these are in the money. The put and the call side are in the money, and we're trying to see how this plays out for us, all right? So is that call side is actually out of the money now, as you can see. Only the put side is in the money, okay? The call side just went out of the money because it's at the 28.50, all right? All right, so, but it's obviously very close to in the money. All right, so we did have a trade idea this morning in currencies. We haven't did a currency trade in a while that I've demonstrated, at least. This is 50 days to go to expiration. I like this trade. It's really nice. If you can get the 009, if you can get the 009, this will be a good trade. It's at the 12 delta. And if you hit review, you'll get at least $100 after fees and commissions. You want to get at least that. You want to get $100. The standard Dorian Way trade is receiving at least $100, as you know. Don't compromise on that if you are doing the standard. If you're going to do something outside of that and you want to get what you if you want to get less than that, that's fine, but still make sure you're receiving what the right amount on your buying power requirement, okay? The right amount on your buying power requirement. All right, so this is the euro currency trade being a little bullish. If you get filled in that, hedge it in the FXE. And then we were looking at some natural gas. You can see that natural gas has been falling out of bed. Let's check a chart. Let's take a look at natural gas over here, everyone. And then we'll do one more thing, look at GameStop, and then we'll call it quits for this live pop-up trading. All right, so this is natural gas. You can see that it's just hit its 200-day moving average. It's been falling quite a bit recently, and it's below its 50-day moving average. This is bluest line, just hit its 200-day moving average. I was looking at something that was bullish in here, obviously, and selling being a contrarian and going into the 40 days to go. So we got a lot of different expiration periods to diversify with and all the trade ideas today. So selling the 2.2, which is a 12 delta right now, and buying the 2.1 and doing that for at least 11. So you're gonna have to let it come to you, right? So once again, you wanna let it come to you. This is gonna be a pretty good trade. Max loss is under 900. You know you're not gonna have the max loss, so you shouldn't. That's rare. And then you get this 101. If you get this 101, you're gonna go hedge it in the UNG if you wanna do this trade. This is not a yellow highlighted trade, but it's a trade I really, really like. If you do this, you're going to go to the 40 days. We do not have 40 days to expiration in the UNG, the ETF equivalent. So you're going to just go to this 36 days, and then you can see that these options are poor. If you're going to trade options on natural gas, you have to do it in the futures. This is really poor, but it's okay if we're buying, and that's what we're doing here. We're going to buy the 9 and sell the 8, and then that's going to cost us way less than 30% of the premium we receive, and that's going to hedge us. Okay, so that's the one you would do if you do that trade that we just indicated. All right, so let me see one more thing just to make sure. We did have one other yellow highlighted trade, and normally the yellow highlighted trades are in stock indexes, but in this case, we're looking at Amazon. I really like this. It's down quite a bit today with, what is that? It's down 2%. NASDAQ is basically following exactly the NASDAQ today, but we're going with 36 days to go. And the reason why we're going to 36 days to go, earnings come out on the 29th. This will expire before that. I'm talking about April 29th. So we go there, we hit the 36 days. On the put side, we were selling the 2760, buying the 2750, and that's the 15 delta, as you can see there. And on the call side, we were doing, this was more of a bullish type of trade, everyone. So on the call side, it's the skewed iron condor, and we're selling the 10 delta, that's the 3480, buying the 3490, and you can see that this is this is really strong in buying power. You're getting quite a bit with way over 12% on your buying power. So I like this trade. This is a yellow highlighted trade. This is one I would do. And then if I did this, I will hedge it on the call side. I know that the market is going down quite a bit today, but I'm more bullish on Amazon, even though it's quite down today. I would hedge this by going into the 36-day QQQ and buying a call spread in there at or around the 30 delta, and this is how it would look if we can get that to populate. There we go, we got it to populate. So it looked like that. It's a little bit expensive, but that's fine. This is way less than 33%, less than 30%. If you got the, let's say you got 180 times 30% of 180 is $54. So you can easily do this one and get a small hedge to the upside, even though you're really far away on the upside. You're at a 10 delta on that Amazon, right? If you decided you wanted to hedge the put side, I would not be against that, but that's what I wasn't suggesting that today. But if you did the put side, you can see that this is actually going to be a little cheaper to do the put side to hedge that. So it's pretty much exactly what the NASDAQ is doing today. The Amazon is a part of the NASDAQ 100, and you can see that it's basically the same percentage up, the same percentage down today as the NASDAQ 100. All right, so it's almost identical. So that's pretty interesting. They're not gonna follow each other exactly all the time, but that's a really good hedge to do it. So you have a question?
So O'Brien, you said the skewed iron condor. So why you are not keeping same distance between call and put legs? Like one side I see 40, one side is 10 only.
Correct. So one side is not 40 on this. They're both 10, right? It's just different delta levels. So this is a 15 delta. That is a 10-point wide spread. The call side is also a 10-point wide spread, but one is a 15 delta and one is a 10 delta. And the why we're skewing it by the delta is because we're a little more bullish. So if you skew it that way, it's giving you more long delta than short delta. Okay.
Okay, got it.
Okay, that's why we're doing that. All right, so let's just recap really quickly, everybody. We got into Upstart. The price is actually working for us right now. We're up $2, and that is the trade we wanted to do. Let's look at GameStop real quick. I know that this is controversial to look at, but this Upstart, I'm trying to show you guys that you can make money in whatever, right? You just need to know a quantitative approach, have a little take, and then if it goes wrong, you can fix it. That's not going to always work, so that's why I'm going to tell you it's speculative, and I do not, I would never say that these are yellow highlighted trades. I don't know why that's taking forever. Come on, let's do that again. And I thought I fixed the internet. I more than doubled my internet speed, so hopefully that's not me and that's the internet. I mean, excuse me, that's Thinkorswim. But let's go back over here, and it looks like, do you guys hear me?
Yes.
Okay. All right. So maybe
Yeah.
maybe something's going on with GameStop because they're not showing that stock. Let me go into something else real quick. All right. Yeah. So something going on with GameStop right now. I don't know why, but let me see. Yeah. So it's got something going on with GameStop. I wanted to trade it, but unfortunately, it looks like the feed on it is down from the exchange or something because it's down across
GME.
Thinkorswim and TastyWorks. Is GME?
Yes,
Oh,
yes,
okay, that's a
that would be it.
that would be it. Thank you, David. I was coming up with some conspiracy theory there, huh? All right, so
I
this is
watch it just for entertainment, but
oh yes, yes. So this is GameStop, right? And for entertainment, that's play some entertainment. Let's see if we want to do something here. All right, so I would be bullish on it. Not that I don't think it's going to go, not that I think it's going up a lot more. I just think that we can probably get further away on the put side, right? But we could try the call side because they got earnings coming out here. I don't think anywhere in the world that this is going up significantly more, but it could, right? So let's go with this 29 days and let's see how much premium we can get on the call side. And let's look at a 15 delta and let's see what they're giving us, right? So you got the 15 delta here. That is a 10-point wide spread. I don't like that, and it's only giving us $38. So no way in the world are we doing that, right? So let's go a little higher, and let's do something we normally don't do. Let's go to the 400 strike. That's still 200. That's still 100 points up, right? And that's a 10-point wide. That's a little better, but you want to get a little bit more than that. Put it in around 115. So when you get fees and commissions, if after fees and commissions, you still get at least 12% on your buying power. And someone that has a question. All right, no worries. I'm gonna mute you real quick here. All right, so this right here is a trade. I don't like the 10-point wide with this because it's so volatile. I would love the 5-point wide. That's why I was looking at the put side, but the put side is obviously a lot more volatile. So for example, let me show you this 15 delta here, buying the 5-point wide spread. You can see how much you're gonna get from that, right? That's quite a bit because GameStop is about to come out of earnings. They probably drop a bomb on people and say, we're not worth this, and we don't know why we're up this much. But it's an attractive risk reward if you think it can hold. It has been holding for a while, right? I would have thought this would have dropped back down to under 50. It has not. It's barely down the day based on its price. So 2% down. And the expected move is still, the implied volatility is still over 300. Expected move is plus or minus 327. The implied volatility based on it, what it is right now is saying this is a 15 delta, or that you have a 85% chance of winning at expiration on this with 29 days. But you do have earnings coming out in a few tomorrow, basically, I believe. Let me see, what day is that earnings? The 23rd. It's not tomorrow. It comes out about 5 days from now, right? So that is, you have to consider that. All right, so I'm thinking about doing this trade, but it's so speculative, and if it didn't have earnings coming out, I would absolutely do it. But I think we're going to be smart and skip this for now. We already went into the Upstart that is going to be really, really volatile as we indicated, and we still have this CCIV on that we have been battling for, it feels like forever. And so once we get that out, we'll jump into some little more speculative stuff just for entertainment purposes and show that we can still win on it. Okay. All right. So that is all for live trading this morning. Please, if you have any questions, let's present it now. And if not, let's conclude.
Okay, Brian, I have a quick question. I guess I want you to kind of look at it. I want to do something with treasuries, and I've been looking at the TLT, and I'm not sure if that's where I should go. But maybe on Friday or next week, we could have something on what would be a good treasury type trade.
All right, so I love the 30-year bonds. I was looking at that. The futures is where you should, if you're not in the TLT, that's the only thing you can trade on options on stock is the TLT. That's the only thing that's liquid enough. On the bonds, or excuse me, on the futures, you can trade the 2-year, the 5-year, the 10-year, the 30-year. I love the 30-year, but you can trade them all. So just looking at this real quickly, Duvel, if let's say you went to the 36 days, and let's say you thought this was really overdone, you wanted to play the contrarian mode. That's me, right? I'm looking at this chart and I'm saying, okay, it's time to buy. It's time to go long this. If this goes back up this way, that means interest rates are coming down. If it continues to go down, that means interest rates are coming up. It's the inverse, okay? So in this case, I don't know if interest rates are going to go back up. I just think that this went down so fast, right? So I'm playing the contrarian. If I were to do this trade, I would go into here and let's look at this 12 delta here, sell this 12 delta, buy 2 points lower. You can see that this is a really good trade. You're getting you're after fees and commissions right here, you're getting $164 to do this. It's a lot of premium on that put side right now. And then you still have your bazooka gun on the side to be able to adjust, because you're not going to do the call side. What I would do is hedge this in the TLT. So let's say I got filled at that, and what was that? I think it was 29 days. I would go into this 29 days and I would buy a hedge at or near the 30 delta. So in this case, let's see what this looks like. This is the 36 delta. That's a $30. We can even get the hedge at that. That's going to hedge us to the downside on this. So I really like this trade, Duvel. If you were going to do just TLT by itself, that's hit here, and you're going to do stock Duvel, you would go into here, and if you can see, it's not as much of attractive. This 14 delta, we're at the 15 delta on with bonds. Let me just make sure I was on the right days, the expiration on those bonds. All right, so that was 36 days. So excuse me. So TLT, let's see if they have a 36 day. All right, they do have a 36 day. So let's clear this and let's see what that looks like on the 36 day. We were at the 15 delta. This is the 16 delta, right? And the TLT. If you sell that, it's giving you nothing, right? Even if we did a 10-point wide spread, it's only giving you $38. So it's not as attractive. That's what I mean regarding the options on futures are better for grains like corn, wheat, soybeans. It's better for oil, natural gas, and it's better for bonds and so forth. But anyway, if you were really bullish, maybe go to this 24 delta. We usually don't go that high on a put spread. I don't like to go any higher than 20, but ideally, or most of the time, 95% of the time, no higher than the 15. But in this case, if we went there to this still doesn't meet our criteria. I wouldn't do this. So I don't like it in the TLT. I do like the TLT as hedging, and let you go further out, right? If you go further out, maybe the 64 day, if you go to the 64 day, you can go to this 21 delta here, and let's sell the, let's see what it looks like for 10 points wide, just to see if we get any love from it. This is 10 points right here. If I can move this down. All right, so that's 10 points, and you're not getting enough still. You want to get at least 110 around there after fees and commissions, maybe even 109 or something like that, but that's not enough. So I'm not attractive to this, but you might be. It could be a decent iron condor strategy to avail, because maybe bonds are not going to go up too much. So you can do something like we just did, maybe something like this. That is a 9-point wide spread, and then on the call side, you can maybe sell a something like this, and that would do it, right? So
okay.
So that doesn't look bad. That's attractive. Looking at the curve here, and you can see that you got a decent range. This is all your green win zone area. All right, so
Okay, I was looking at July, and I was going to sell one call at 135. I'm sorry, buy one call at the 135 and sell 3 puts at the 125.
okay, so tell me do that again.
July on the
July
TLT.
July 18th or
Yeah,
16th?
July
18th.
16.
Okay.
Yeah.
16 or 18th?
It was July. You have June.
Oh, I'm sorry. I'm reading that wrong. All right, sorry. All right, July 16th. Perfect. And then tell me the
Yep.
strikes.
And I was buying one call at 135,
Okay.
and I was selling 3 puts at 125.
Okay, so you're doing a bionic bull. All right.
Yeah.
So
And selling 3 puts. Yeah. Mm-hmm.
Okay, and selling 3 puts like that. All right, so This in your account, this will work nicely, Duvel, because you got a portfolio margin. This will work great. It's going to be a fraction of that, but
Yeah.
in a regular T account, it's going to be $5,900. That's going to be pretty expensive, unless you got a big size account. And if you do have a big size account, then you should be in portfolio margin then, so that can be a fraction of the cost. All right, so in this case, I do like it. It's really bullish though. I don't I don't know how much legs the bonds have to go up based on we're going to need some type of economy problem for it to go up significantly, but I like it though, DeVale. I like it.
Okay. Okay.
Because you obviously, if it does go up a decent amount, and you don't need it to go up that much, you can make a decent amount of money. But the probabilities right now of it going higher to TLT, going higher than the 145, is a 22% chance, right? This is how I get all my probabilities of, okay, is it really going to go up a lot, right? Well, this is telling me I only have a 22% chance it's going to go higher than the 145. So do I want to allocate this much capital for a 22% chance? In your case is different, but I'm just giving the regular T type of background for it. All right, so any other questions before we conclude, everyone? All right, so if we don't have any other questions, I do appreciate everyone.
O'Brien, one quick question. In your yellow trade, you said Iron Condor for the ITY. It says no upside risk. There is in Iron Condor, there is a risk if it go too much up, right?
Not that one. The one that I indicated, let me see, which one did I say with no upside risk? All right, so on the trade tab, on the trade ideas today, I gave you an RTY trade that has no upside risk. Let me explain that. This is an Iron Condor, no upside risk. We were going to, on that trade, it was 29 days to go, so I'm going to 29 days. And what I'm going to do is sell the call side first, everyone. I'm selling the 24.15. That is 29 days ago. Just make sure I'm in the right area. Yes, I am. 24.15 is this, and we're buying the 24.20. Okay, so the max loss, if we just did this call spread, the max loss is 172. Okay, this is a 5-point wide spread. It's $50 a point. So 50 times 5 equals $250. So as long as we receive $250, there's no way we can lose to the upside. So what we're going to do is go down to the put side here. We're going to scroll down to the put side, and we're going to sell the 2090, which is right here. We're selling the 2090, and we're going to buy the 2040. So this is a 50-point wide spread on options on futures. So you can't do this type of spread on options on stock because it's going to require $5,000 to put this up because it's 100 times 50, right? So this is a fraction. This is like using portfolio margin. This is the original portfolio margin. So you're only getting a fraction of your buying cost to do this, right? So this is a 50-point wide spread. It's $50 a point. So this is your max loss right here. And so you're receiving $290 to $300. I told you to get put it in at least 60, put it in at least $6 here, and then that means you would get at least $300 before fees and commissions. After fees and commissions, you're getting $286. The most you can lose on the call side is $250. So you cannot lose to the call side. Let me show you what that looks like on the curve view, so you can realize what I'm talking about. So this is the money line here. If it goes up, you'll win all the time because you do not have any risk to the call side. The way you lose is this red zone here is down, but it has to go down significantly before that becomes a problem, because this is where you start. This is where you break even point here, right? So you have a lot of ways to win on this no upside Iron Condor. Traditional Iron Condor, you're correct, Sam. The traditional Iron Condor is that you do have risk to the upside, but this is not a traditional Iron Condor. This is a no upside risk Iron Condor. All right, so I like that because it's giving you
very less distance, like call legs is only 5 difference. That's the reason.
Exactly. It's that the way you structure it is giving you the no upside risk. This is a
Okay.
5-point wide spread here. This is
Right.
a 30. This is a 50-point wide spread. So this is giving us we're receiving more here than what we can lose here. So that's why it's no upside risk.